Hey everybody, this is Jose Blasco. We are about to start. 30 seconds to go, more or less. Let's use this time for a sound check. Please go ahead and type a quick message on the chat box. In the chat box, I should say, if you hear my voice correctly, that would be a great indication for me to know that all is good and we are ready to go. Hey Andrew, how are you? Good to see you. Very good, everybody. So we are 10 seconds away from the starting time. Ahmed, how are you? Pansy, very nice. Thank you for those confirmations, everybody. Here we go. We are live, everybody. Time to begin the session. So let me introduce the session officially. How are you, everyone? Good to see you, my friends. Welcome to today's session. Today it's May 14, 2020. We are getting together today to do a little bit of longer term trading. So we'll be utilizing options. We'll be looking at the markets from a point of view of directional opportunities as well as non-directional opportunities, and we'll be applying whatever the market suggests. We'll basically be looking at trade opportunities that follow certain rules. And if the rules are met, then we will simply execute those trades. If the rules are not met, then we will continue researching for opportunities without falling into random trading or making up opportunities without having a clear set of rules. Okay, so everything we'll do is with a mechanical approach to trading, as we always do. But just for the new of you joining the session, for you guys to know our philosophy. Okay. So I'm going to read the disclaimer to have the session officially started. And from there, I'll take a look at the chat box, see if there is anything I need to take care of, and then we start. Okay, so disclaimers. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And that's the introduction. So the session is now officially launched. The session is officially introduced, and therefore we are now ready to begin our application, looking for market opportunities and so on. Okay, so here's the beautiful TradeStation platform ready to serve us. But in the meantime, quick look at the chat box. Furmon, how are you? Marcus, how are you? Very good, everybody. So it seems that no comments, which is quite of a normal thing when we start the session. There is not much to comment yet, but just in case, I always like to take a look. Okay, good to see you all, and let's begin. So to begin the session, okay, as always, our focus is going to be using the scanner. Okay, and the scanner got multiple rows in this particular case, but what we care about is the bottom part of the scanner, where we have two types of opportunities: the ones which are debit, DBT, and the ones which are credit. Okay, credit means basically that we're going to use option strategies where we sell options. Okay, sell options, collect premium, and then wait until the expiration date of those options. That way, you collected premium, then the options expire, then you keep the premium. Okay, and you make money in a, let's call it a passive fashion, enjoying and just letting time pass. Now, of course, this has requirements. The stock needs to be in some sort of a range, or maybe move in some sort of a direction. That's why under credit we have what we call pure non-directional, ND. Which means that for us to be able to profit from those opportunities as a credit option strategy, we need the stock to stay in a range, in a horizontal range on the chart. So in other words, non-directional. Okay, or if you want to have a little bit of a bias, that's when we talk about the neutral trades. Okay, neutral with the up arrow or neutral with the down arrow, where we want the stock to go up, or maybe a better way to say it is that we don't want the stock to fall too much, or we want the stock to go down, or maybe a better way to say it is that we don't want the stock to raise too much. As long as the stock doesn't reach a certain level, those neutral opportunities will pay us that credit as well, and that's a nice way on how to profit too. And finally, the ones on the top are the ones who normally pay the most. Okay, they are also the more difficult, if you wish, the more sensitive to time, which is the directional opportunities, where you catch a move, you write a move, and you get paid from the options contracts because a move happened and you entered and you exited at the right time. So those, of course, imply more precision, and it's more delicate, especially understanding the fact that, I always mention stocks are a fragile asset, and therefore, there are different moving parts there. But at the same time, those opportunities are always fantastic because, as I said, they pay better. Okay, so normally my assumption, as I normally say as well, how you mark, my assumption would be that the majority of you have a portfolio, have an account where you are running multiple trades in parallel. And basically, you may have already some trades running. Maybe some of you have already 3, 5, 10 trades long. Some of you have 3, 5, 10 trades short. Some of you have 3, 5, 10 trades which are non-directional. Well, if that was to be the case, that you are loaded on non-directional or loaded on long trades or loaded on short trades, then probably you should ignore the trades I plan where you have already too many of those, right? But because we are all different and I don't know what you have in your accounts at the moment, so what I'm going to do is I'm going to treat each opportunity like it's a valid one, and I'm going to go beginning to the end, following the whole process, assuming all of you need it. Okay, and I will leave it to you to decide if you have to take the trade or not, depending on how many other trades you have in your account that bet in on that direction already, long, short, or that are non-directional, because you don't want to be loaded with too many of any, because then you will not be diversified. Okay, so we talk about this. We have a few videos on the sharpening playlist on the YouTube channel where we talk about precisely this, right? Having a diversified portfolio, how to hedge the portfolio. We talk about delta hedge, we talk about gamma, etc., etc. Okay, good. I like to, from time to time, do a little bit of a repetition of something that I would guess most of you know already, but it's important that you keep it in mind, because for the ones of you attending these sessions for the first time, so you may not realize it, and next thing you know, you take all the trades I plan, and that should not be done like that. Okay, so watch those videos on the YouTube channel if you haven't yet. Okay, anyway, so notice I clicked on non-directional. This is where I'm going to start today, and notice that when I run the scan earlier before the market opened, I got 3 results, which is the gold ETF, the EIF ETF, which is a treasury ETF, okay, and then Walmart, which is a stock. Okay, now for non-directional trades, you have heard me say many times that normally I ignore ETFs. Okay, so GLD and IEF, I would ignore it. Okay, why? Because normally they carry limited premium. Okay, if you were to do it with the index itself, you were to do it with gold futures, you options on gold futures, I meant to say. So then we may be dealing with something different. But with the ETF, it's almost always quite disappointing from a premium point of view. Okay, so in this sense, I am gonna go ahead and take a look at Walmart. And that's going to be the one trade I'm going to plan today from a non-directional point of view. Let's see if we can make it work. I am looking at the earning date. May have a bad news here. The earning date is on May 19. Okay, it's on May 19. So if I look at May 19, being today May 14, obviously May 19 falls in the middle of next week. It's Tuesday. Okay, so the only way for me to do a trade on Walmart would be to use tomorrow expiration, which is May 15. I would love it to be able to find an opportunity with Walmart that works well in that sense. And nicely, Walmart is crashing pretty hard right now with minus 2%, going through a green UFO. So on-field orders have been cancelled, have been removed, which means that there is a lot of momentum, a lot of willingness to sell and very little willingness to buy. So that is probably scaring everybody, and that is probably helping to increase the value of the options, which is something that we need to do those trades. Okay, so from a probability point of view, we got 58% when using regular session data. When we use pre and post market, what do we get? We get 56%. Okay, so that's good, and we do have multiple UFOs above and below. So what I'm going to do is, without thinking much about it, I'm just going to go ahead and load the Option Station Pro and start putting the trade in place to see if this is going to work or not. Okay. Again, with only 1 day to expiration, the stock is $120. It's not like I'm going to get paid amazing amount of premium. Also, Walmart is, a pretty let's call it stable company. So it's not like it's a volatile biotechnology company or something like that. So I'm not sure we will be able to make it work, given the fact that we only got 1 day to expiration for us to put this trade in place. Okay, but at the same time, it's always worth it to check, because if it does work, you sell an iron condor on Walmart, and then the speed of time decay is massive, massive, massive. Meaning that the time advantage here it's really interesting. Okay, so we're gonna take a look and see if that's going to work or not. Okay. Hey, Boyan, how are you, my friend? Yeah. Good. Okay. So let's go ahead and look at options. I'm going to load WMT, Walmart. Here we go. We're going to look at May 15 expiration as it loads. Okay, come on, come on. Okay, and I'm just going to right click anywhere. Okay, right click anywhere. It's not gonna work, guys. I'm telling you already, it's not gonna work. Okay, but anyway, let me do the process. Okay, so you guys see the process, and that way, if you have to do it by yourself, you can do it by yourself. Okay, so what did I just do? First, I inserted an Iron Condor, okay, using May 15 expiration, and the strikes right now don't matter. They will matter big time, of course, but not at the moment. Second step, okay, I am changing my price slices to be plus 1 standard deviation and minus 1 standard deviation. And that tells me that from now until tomorrow, that stock may move to 125 and 118. So keeping that in mind, I want to look at where is the 125, okay? And notice how the 125 is here, okay? That's 125. So the stock is not supposed to go above that, okay? But we have a rule, which is we need at least 2 UFOs to defend ourselves. So that is 128, okay? And the reason why I said it's not going to work is because if you go back to the option chain and you look at the 128 call, notice that the midpoint is 4 cents, and that is not enough. The minimum premium we accept is 35 cents. Sometimes we drop it to 25 if the other side of the condor is paying enough, but certainly 4 cents, it's totally unacceptable. It's way too little, and therefore we are not going to accept this trade. Okay, so unfortunately, we concluded this trade quite quickly. Okay, I'm just gonna I'm just gonna have a quick look just in case. Okay, just in case, maybe we'll have a surprise. So I'm just gonna place my line here. This is UFO number 1. So if I move this to regular session, do we have another UFO on top of it? No, it doesn't. So the one we had here is perfectly aligned with the other one that we had in the pre-post market session. Okay, so in other words, I was hoping maybe that second red UFO was just a little higher, so then I could maybe use the 125, 126, but it's not the case. And therefore, again, the trade with Walmart, the non-directional trade with Walmart that was going to be an Iron Condor, it's not a trade that we could execute. Okay. Okay, I'll get a sip if you don't mind, guys. Okay, good. So let's continue. So since non-directional trade is not an option, so what I'm going to do is I'm just going to click run again, okay, because the market is moving quite heavily and maybe other stocks are positioning themselves as a candidate for non-directional. So I just click, so we have the scanner running here. And in the meantime, I'm going to go ahead and look at the buy opportunities and the sell opportunities. So I'm sorting these by price. We have a Chipotle Mexican Grill as the one on the top. This is close to $1,000 stock. Nothing wrong with that, but at the same time, again, I always say that I understand that here in the YouTube channel, the majority of you are probably in learning stages, and in this sense, utilizing stocks that are too high as a price point may not help you to practice unless you use a demo account. So in this sense, I'll keep that for the last, okay, in case we find nothing. And what I will do is look and see if I can find other opportunities such as T-Mobile, which is looking good from multiple points of view. Okay, so first, from a climate point of view, we got a confirmed climate with a thick dot, blue color. This is dot number 1. where the climate is supposed to be 7 candles. Okay, so this is the beginning part of a climate, and we have an average, an EMA around, let's call it 90, 89.9, let's call it 90. Okay, so the question is, do we have any UFO at or around 90? Okay, and here we got one which has a starting point at 89.73. Okay, 89.73. I would say good enough. Okay, that UFO is good. But before I validate that one as my entry, because I didn't say it, but you can see the performance stats here represents 53%, which is 50 or above, which is also a requirement we have. So that's good. So then the other possibility would be to look for stocks for pre and post. And we also got 53%. And yeah, we got nothing around the 90 area here in this case. Okay, so nothing against the 90, but around the 90. But we do have it if we use the regular session. Okay, so it seems that we have an opportunity here to plan with T-Mobile. Okay, we have an opportunity with T-Mobile, and therefore we're gonna begin planning it. In this sense, I am gonna be looking at targets. Okay, and for that I will turn on. Wait a minute. I am making a mistake here. I got the 55-minute time frame on the right, but I got the weekly on the bottom left. Okay, so let me change this to daily, because this may change a lot. This may change everything. Okay. Now, so let me change to daily. I had my chart. Yeah. So, okay. Good. Thank God I caught that one. So notice on the daily time frame. Okay, on the daily time frame. This is because last time we did the session, we did this longer term trade with Microsoft. Remember, we did this. I applied, what I called in the YouTube channel, option strategies for crazy during crazy times. You remember that? So I was using a weekly time frame because that was a longer term thing. Okay, which by the way, we could go ahead and review it later on because the market has been coming down. So I would like to show you the P&Ls of that in case some of you are in that trade as well. And by the way, if any of you is in this trade, I'd love to know. But notice how here we had a change of climate, went from blue to red. And on top of that, that red color is thin, is not confirmed either. Okay, so T-Mobile is not a valid candidate. Okay, so then we'll go for the next one, which is SQ. So let me see what we have with SQ. Okay, so very strong move up, 3% with SQ. What a powerful stock. Okay, what a very, very powerful stock here. 16 out of 7. This is way out of what probability would suggest, but that's true and it's real and it's happening. So this is to be respected. Okay, so anyway, the other stocks there are much less liquid, and therefore for now I'm going to leave them alone, and I'm going to go and research other opportunities to the short side. Okay, so sorting my shorting opportunities here, we got a CVX. Okay, CVX. Let's take a look at CVX. Mark, that was the session on the last Thursday. Okay, so we got Chevron that is loading. While Chevron is loading, we can take a look at the climate. Climate is looking good. We got confirmed climate. It's 2 out of 6. Okay, so we're good. And the EMA is 90.93, so it's around 91. And around 91, we do have a UFO right there. Okay, so we may have a trade here. We have 51%. Okay, we have 51%. That is good with the regular session. With pre and post market, we have 51 as well, and we got a UFO there starting exactly at basically just a little under 91, which is exactly where the EMA is. That is 90.65. okay, from 90.65 to 91.80. Okay, so 90.65, this is a perfect entry for the trade. So we have a trade here with Chevron to be planned to the short side. And what I want to do is look for the target. So then I can get into the option station pro and I can plan the whole thing. Okay, so this green UFO that I'm pointing at would be the candidate for the target. Okay, and you can see here 85.25, that would be the target point, 85.25. Okay, so let's keep all of this in mind. Let me put it all together in a visual format so you guys can follow easily. So we're gonna deal with Chevron CVX. Okay, loading, very good. We're gonna have two price slices, that's enough. So funnily enough, now I just forgot the target, so I'm gonna have to go and recheck. It was 85 something and the entry was 90.65, isn't it correct? So 90.65, that was the entry. 90.65 is the entry, that is correct. And then for the target, double checking these very quickly here, 85.25. So I remembered the 85, but I forgot the 25 cents. So now I am editing this and now I have it right. Okay, so 85.25, 90.65, those are the price points. Okay, so if I was to calculate the distance, okay, so we are planning on a trade where if we're right on the trade, we are going to collect $5.40 of price movement in our favor. That's the plan for the trade. Okay, this is the plan for the trade. Now, this stock in the daily time frame has an ATR of $3.83. So if I take 5.4 divided by 3.86, this is telling me it's going to take 1.3 ATR to get there. And remember, we have a rule that says that we give ourselves 7 days per ATR when it comes to time to expiration. So that is basically a 10-day trade. Okay, this is what we're shooting for. And basically, we need 10 days to expiration. That's the minimum we need. Okay, this is the minimum we need for the trade to be valid. So when looking at CVX, okay, and looking at the various expiration dates, when I look at 10 days to go, that would place me on here, which is May 29, which is 15 days to expiration. But this is only one part of the rule. The other part of the rule is to look at the earnings dates for CVX, okay, which is right there. You can see it's 24th of July. That is way past May, but certainly we want to use that particular expiration date to gain an advantage in case the stock was to move against us, because time decay then would hurt. But at the same time, what would happen is that we would get the benefit of options gaining value as the earnings dates approaches. Okay, so I said July 24 is the earnings date. We don't have July 24. We have July 17 is the nearest one. Well, that's what it is. Okay, and therefore, what I'm going to do is I'm going to go ahead and right click to analyze and buy a vertical spread. And I'm going to work on this here. And the other thing I want to do as well is to right click to analyze and buy. What would happen if I buy a put by itself, a single put option instead of a spread? Okay, so what would happen if I do that? Okay, so let's take a look at this and we will see what is best. In the meantime, make sure, this is critical, guys, make sure that you have good control over what is checked and what is not checked here on the left part of the Option Station Pro. So I'm going to uncheck the single option, leave the vertical only, build the trade, and if it works, I will just let it there, and then uncheck it, and then plan on the single, and then I can compare the two of them. Okay, but make sure you don't have both checked at the same time, because it would distort the Greeks, and then you would not be able to adjust it properly, even though you would think so. The Greeks would be the addition of both. Okay, so careful with that. So now, when putting the spread together, okay, I need to keep in mind how we're gonna build the trade. Okay, and for that, just to be visual, I'm gonna make a few notes on the charts as I always do. So let me move this here. So we said that we're going to do a spread, okay? And a spread is going to be done by buying a put, okay? So we're going to have to buy some put, and then we're going to have to sell, some put as well. So we're going to buy a put above, we're going to sell a put below, and the two together, that's going to be our option spread that will pay us, assuming that the market is going to fall, and we're going to be right. Now, the rules for the put I sell is that that put needs to be beyond the target. Okay, the target is 85.25. Therefore, beyond would be 85 or below. Okay, 85 or below. So I'm gonna go back to Option Station Pro, and where it says -1, which is sell, I'm gonna take that number and I'm gonna make it 85. Okay. Then we said we're gonna buy a put, okay? And the put we're gonna buy, okay, the rule, okay, for the put that we buy, the rule is between, not beyond, but between, okay, entry and target, okay, between entry and target. So in other words, if the entry is 91, okay, if the entry is 91, so I guess that you would agree with me that I make sense if I suggest to go ahead and buy the 90 put, okay, which is a little below, right? Is between the entry and the target. So buying the 90 and selling the 85, okay, that would make the spread to meet the rules I just described. So let's do it. So buy the 90 and sell the 85, okay? So that's the spread. Okay, so with this in mind, we're gonna look at the entry point, which is 90.65, and then we're gonna look at how much delta I get if I do that option. And notice it's -10, which is not acceptable because the rules that we have imply that we always need to have at least, okay, at least 30 delta, in this case negative, because it's a trade to make money on the way down. So it's negative deltas, not positive. Positive is for the trades that are bullish trades, trades that make money on the way up. And therefore, for me to make my -10 to become -30, we've got a few ways on how to do that. But one way is to push down my 85 to 82.5. Now it becomes 15. What if I push it to 80? Now it becomes 21. What if I push it to 75? Now it becomes 26. Now if I push it to 70, now it becomes 32. Okay, well, it's what it is. Okay, but again, you hear me say, well, and you see me in deep thoughts because I'm thinking, how much am I gonna get paid for that one? And you know what? It's pretty okay. There was 70 pays you $182. Okay, so it's okay. It's okay. So now, if we were to do the trade the way it is right now, so what do we get? We get a delta, which is the nearest I could make it to 30. Okay, the strike price increments you saw were $2.5 at a time and then $5 at a time. So I cannot be that precise, and therefore my delta ideally would be -30, but it's in this case it's going to be -31. Okay, so it's okay. But what's very nice, okay, and this doesn't happen that often with the spreads, but it does in this case, is that both of the gamma values at entry and target, both, they are positive. Okay, so that spread is looking pretty good. And if you were to get filled at entry, you will need to count on around, I'm just going to round it up to 550. So let's say the spread is going to cost you $550, and therefore that is your risk. Because when you buy a spread, the most you can lose is what you paid for the spread, which is 550. Okay, so of course, if you want to take more risk, you want to take double, then do double the spreads. Okay, and then it's going to be 2 times $550. If you want to do it 3 times, you do it 3 times, etc. Normally, I always do the math for 1 to keep it simple. Okay, so 550 would be the cost of this trade with -30 delta and positive gamma. Okay, so this is what we got with the vertical spread. Now, I am on checking the vertical spread. Notice everything is zeroed out. I am now going to check the single option. Okay, now I got Greek information. And now what I'm going to do is I'm going to move the strike, okay, to get to my 30 delta, which maybe, I would say maybe the 85 put, less than that, 82 and a half. Yeah, something like that, 82 and a half, okay? Now, so here's where mathematics and the reality don't agree. Okay, so mathematics, which is in this case is the Greeks, okay, tell me that the 82.5 put give me a delta of 30 at entry with positive gamma in both cases at entry and target, and the risk of the trade, the amount of money we need to pay to buy that put, is $410, which is less than the $550 we saw with the spread. So you would say, oh wow, buying the put is cheaper, it gives me the same delta, let's go for it. Okay, and yes, mathematically speaking, this is what it is, and if you were to take that decision, it would make sense from the math point of view. But there is something that is problematic, which I do not welcome. And that one thing is the fact that when you reach to when you were to reach your target, which is 85.25, okay, notice what would happen to your put. So your put would still be out of the money when you reach your target. I mean, the rule that we have when we buy an option, okay, it's to buy an option which is between, okay, entry and target. Okay. Okay, not sure why I am not able to. Okay, now it should work. Okay, it's not taking it for whatever reason. Okay, you got me. Entry and target. So the option that we buy should be between entry and target, but notice that the 82.5 is not between, it's beyond. And that is not the rule we have. Okay. And we have that rule for a reason, which is to avoid that when you get to the target, the option that is driving the profitability of the trade, which is the put you buy, it's in the money instead of still out of the money, because there is a collection of consequences of that fact attached to that fact. Okay, so in this case, the trade is cheaper, and there's a reason for that. You got these advantages compared to the other trade. Okay, and therefore, basically, when you notice that, the solution to the problem is very simple. You are not gonna do the long put. You are going to do the spread. Okay, so my friends, we just found a trade which is valid. So I'm just gonna place the order, and then I'm gonna be looking into the chat box in case there are questions. If you have any question, please type so I can read you after I place the order. Okay. So I'm just gonna click on the button with the three dots to initiate the trade. I am using, as you know, a simulated account here in the sessions in the YouTube channel. So I'm gonna move to market order, so the orders get filled. You know, in the TradeStation platform, when you trade options simulated, limit orders don't work all the time unless you deal with very liquid assets. So I'm just gonna use market, so I get filled for sure. So that way I can demonstrate and review those trades in the future. And of course, I'm going to use an activation rule, because if I click place order now, I will get filled immediately. I don't want to get filled immediately. I only want to get filled if Chevron goes up and reaches 9065, which was the beautiful red UFO that we saw on the screen a minute ago as we were planning the trade. Okay, the last input I need to make sure I got right is that the duration of the trade is day only. That way, if I don't get filled by the end of today, the order will be canceled and it will not cost me exchange fees. Okay, so I'm gonna click place order. 1, 2, 3, place order. Would you like to buy a vertical spread with the 90 and the 70 put? Yes. That's a day order, and it has an activation rule, which is Chevron greater than or equal to 9065. Yes or no? Yes. 1, 2, 3. Yes. So the order has been sent, and I am in the trade. Okay, here we go. Well, I'm not in the trade. What I meant to say is that the order is now received and they're waiting to get filled. Okay. Yeah, well, I got a collection of futures trades from earlier. I don't want this to be confusing. So I'm just going to close that down. Okay. So anyway, yes. So that's what we have here. The trade is up here, CVX, as you can see. And I would like to go back down here also and check on the Microsoft trade in just a second. Let me check the chat box first. Very good. Very good, very good. Nice. Perfect. Okay. Good. No questions about the trade. So that means that you guys are following up. Okay. Okay. So before I continue, how is it going so far, everybody? If you are following up and everything is good, just type good. Okay. Or type okay. Very nice. Okay. So the Microsoft trade. For the ones of you that were not with us last Thursday, okay, we entered a custom trade, okay, which is made of buying a call, which is basically being paid by two put spreads. Okay, so we sold two put spreads, and that pays for the call. Why? Because this is a long-term application where we want to take delivery of shares of Microsoft as a long-term investor. Okay, this is not a short-term trade. This is not a swing trade. This is something for the investors, not for the traders. Okay, but again, we don't do this too many times. So I wanted you to notice that when we entered this trade the other day. Okay, so let me compress this back to the chart. So when we entered this trade the other day, Microsoft was, I don't remember exactly where, but I mean, it's easy to find out. It was on the 7, okay, it was here. So Microsoft was more or less here, okay, around 182, something like that. And from there, it started moving higher. Okay, so for the ones of you taking the trade, you would have seen your account to begin becoming slightly positive and green color. But then we had this pretty important push to the downside, given the fact that the broad markets have been collapsing, right? So what's happening to the trade? Well, the trade is showing negative P&L. Okay, but is this concerning? No, because we have a short put at 170. Okay, meaning that we are embracing if Microsoft keeps falling all the way to 170, because when it gets to 170, then our intention is to acquire shares and become a shareholder of Microsoft shares. Okay, so the fact that we see a negative P&L, it is not a problem. The risk of the trade is determined based on the difference between the 170 and the 175, which is $5. Therefore, $500, because it's twice the spread, is $1,000 risk. This is what we discussed the last Thursday. Okay, and for the ones of you taking this trade, you were okay with $1,000 risk, and that's what it is, and you are in the trade, and there is nothing to be done. So expect if Microsoft keeps falling, expect the negative P&L to become much more negative. Okay, much more negative. I mean, let me show you MSFT. So if I look at Microsoft and I move into analysis, okay. So let me uncheck this and let me check what we really have. Okay, so I just checked the trade that we have. Okay, which is currently showing minus 151 P&L. Okay, so notice what the P&L would be if Microsoft drops to 170. Okay, so the P&L is going to show us minus 400. Okay, so is that a problem? No, it's not a problem, because you want it to come here or below. That's how you get the shares assigned to you at 170, which is the plan for this investment. Okay, now of course in the meantime this may do whatever and then starts going higher. So notice how if it starts moving above 184, the trade will start being profitable. Okay, and if Microsoft was to reach again, let's say 185, let's say it goes to 190, just to give you another example. So if Microsoft reaches 190, so next thing you know, now you are making close to $200 instead of losing money. Okay, so the trade will start paying you. So if Microsoft just takes off and creates this amazing, beautiful breakout, then you're gonna be a happy trader in this case. But if Microsoft then falls down, you will have the shares put to you, and then you become not a trader, an investor. Okay, which is a different game to be played, which I was very persistent last Thursday to explain that fact, and I wanted to reinforce again this for the ones of you in the trade. Okay. Okay, good. Perfect. I can see that you guys are typing that you're good, that everything is being followed. Wonderful. Wonderful, guys. Okay, so let's continue. Non-directional trades. I clicked earlier to refresh my list, but nothing new showed up. Okay, so it seems that Walmart was the only candidate. Okay, so then that's what it is. Okay, When it comes to shorting opportunities, let's see if we can find anything else. Or you know what, just to create a bit more diversity, maybe it would be good to look at opportunities, to do credit spreads. Okay, so let's take a look at Alibaba to see if that particular stock has any possibility to give us an opportunity to do a credit spread. Okay, so since we looked at long and short, the remaining part of the session, I would like to look at something credit. Okay, Alibaba has earnings happening when? On May 22nd. So May 22nd, it's gonna be next Friday, so we cannot do it. Okay, if it was May 25, then yes, but May 22nd doesn't work. So what about Baidu? So Baidu, okay. So Baidu has earnings happening on May 19. It doesn't work either. Okay. Well, actually, Alibaba may give us an opportunity to use tomorrow expiration date. Is a $200 stock. Normally has more volatility built in compared to Walmart. Okay, Walmart got like 46% volatility earlier. What about Alibaba? How much volatility we got with Alibaba? I'm going to be looking at this value there. 52%, so that's better. So maybe we have an opportunity. So let me do this. Okay, on the call side, I'm just gonna right click, analyze and sell, vertical. Okay, and I'm just gonna look at plus one standard deviation. That's 203. Okay, so let's take a look at Alibaba 203. So 203 is right there. Okay, so we have a red UFO right there. Okay, but that one doesn't work because it's only one. Plus, it's happening prior to the 203 mark. Okay, so we need to be above that. Okay, the next one I have is 208. Okay, and the one thing I haven't checked is what happens if I look at regular session. So if I look at regular session, I do have a UFO there. Okay, so 201 will be UFO number two. That works, but unfortunately, it is below 203, so that doesn't work. So then 208, notice 208 is also coinciding with this one. But by the way, regular session doesn't work because it's only 42%. But if I look at pre-post market, then it does work very well because that's 50 over percent. You can see the institutional interest here is clearly in the pre and the post market time for Alibaba. Okay, so 208 would be your strike. You have two UFOs to defend yourself. And the question is, if I sell the 208 call, how much I get paid using tomorrow expiration. Okay, and I don't have 208, it's 207.5, but it's 14, which is less than 35. So sadly, just like it happened with Walmart, we cannot do a trade with this particular stock. Okay, and Baidu is expiring. When was it? I said this is Baidu. So Baidu is expiring on the 19th. Okay, so I could do the same. Okay, so let's take a look at Baidu. So Baidu got 67% volatility, so that's more volatility. Okay, let's see if this translates into an opportunity or not. So let's go ahead and right click to analyze and sell a vertical spread. Same process as always. And I'm going to look at a plus one standard deviation that is 96.6. So statistics suggest that that stock will not surpass 96.6, which is somewhere here. Of course, you would want to have two UFOs in your favor. Okay. And in this case, we only see one. It provides 48%, which is acceptable for non-directional trades. It's not amazing. So what happens if I do regular session? Regular session is giving me 44. So 44 is not acceptable. And therefore, Baidu is not a valid candidate for any of these trades. Okay. So we are going to pass. There is not enough institutional interest to make this trade high probability. Okay. So what about we look at credit spreads to the upside? Okay. Credit spreads to the upside. So we have NVIDIA. So let's take a look at NVIDIA, earning date for NVIDIA. So the earning date for NVIDIA is May 22nd. Okay, May 22nd. So same story. The only thing we can do is to do tomorrow expiration, which is May 15th. Let's see if we have an opportunity or not. So in the meantime, I will load NVIDIA because I need to do the same process again. Okay, so NVIDIA. So now I'm going to use the put side because now we are doing neutral to the long side. So right click, analyze and sell a vertical spread. And the minus one standard deviation says 299. Okay, so it's basically 300. So 300, we got 46%. That's not good enough. What if I switch to pre-post market? That's 50%. That is good enough. Okay, so 300 is here. Okay, and therefore, if I was to sell options below this UFO, I would have two UFOs in my favor. So that's 296. Okay, so let's see how much I get paid for the 296. It would be 295, and it does seem that I get paid 76 cents. Okay, so in this case, there is more premium available here, and I am thinking of trying two different plans here because there is another UFO here at basically this is 280. So what happens with the 280? Now the 280 will not work because 287 is 35 cents. So 280 is too far. So I had two ideas, but really I can only plan for one. So let's plan for one and let's see what happens. We're gonna do a 296.5. So we're gonna do 295. Okay. So we're gonna do 295 and below is gonna be 292.5. Okay. So 292.5 below and 295 above. So sell the 295 put and buy the protection below 292.5. Okay. If you were to do this trade, you would be collecting 18 cents of premium. Okay. The question is, okay, maybe I should bring the rules to the main screen. Okay. So that way this would help everybody to follow what we're doing more easily. Okay. So I'm just gonna scroll down. I think I went too far. Yes, I went too far. So let's start again. Here we go. That's what I was looking for. So the rule we have is that we are looking for at least 35 cents for the option that we sell. This is met because if we sell the 295, we get 75 cents. Okay, so that's more than 35. That's good. But then we have another rule. Which is that whatever amount of premium we collect needs to be at least 15% of the difference between strikes, because the difference between strikes is the risk. Okay, and the difference between strikes here is 2.5. So 15% of 2.5, that is $37.5. Okay, which unfortunately this particular spread only provides 18, or 20 now, which is less than 37. Okay, and it may have to do with a little bit of lack of liquidity at times or whatever, but the fact is that we are not getting what we need to justify the risk of the trade. Okay, so yeah, we got a no for this trade. The trade is discarded, and we're gonna continue working on the other trades. The next one in the list seems to be Target. So looking at the earnings date for Target, we are dealing with May 20. So same story. Is almost everything is copy paste, isn't it? So we're gonna have to deal with options that expire tomorrow. Let's see if we can make it work. This is always tough, guys, but if it is worth it to check, because if it works, they are very high probability trades. So Target, So we will do the same operation, same process, same steps. Load target first. Looking at the May 15 expiration, right click to analyze and sell a vertical, minus one standard deviation below. So 117, it's where price should have a difficult time reaching there. So 117 is about there. So if I was to use that UFO, that's the second UFO. So 115 would be the strike for me to sell. Okay. So how much I get paid if I sell the 115? That's the question. And I get paid 10 cents, which is less than 35. So the trade is not valid. Okay. With target. And then the last one here in my list would be JD. Let's see what we've got with JD. So JD earnings. Wow, amazing. 15th of May. So we cannot do it at all because the earnings are tomorrow. So it's not going to work. So wow, we got so many no's on that side of the equation, on the non-directional trades. Okay, so guys, basically I kind of went through the various opportunities from the scanner. The lists are relatively short. Okay, and again, it's quite normal. We talked about this before. I just want to show it to you very quickly, and then we will conclude the session. But when you look at the S&P, so I'm loading the S&P right now. Okay, so loading. Okay, Mr. S&P. Well, while it's loading, maybe I got data for the VIX already. So let me check the VIX. Yes, so I got the VIX. So the VIX is currently trading at 36. Okay, currently trading at 36. Okay, which is, I mean, if you look at the upper left portion of the screen, then it looks like 36 is it's very low. Okay, but the reality for the ones of you that have been trading for a while, options. Okay, I mean, most of the time the VIX is right here, meaning that if you reach 30, you are very, very, very happy. And currently we are dealing with 36. Okay, so this is a pretty high reading for the VIX. Okay, and when options are that expensive, okay, normally there is a reason behind it, which is the fact that the stocks are moving a lot. And when the stocks are moving a lot, everything that has to do with credit opportunities normally will not be selected by the scanner, because what the scanner is looking for is markets that are moving horizontally. So if the markets are moving a lot, and that's why the VIX is so high, then you basically have less of the quiet stocks because most are on the move given what's happening to the overall broad market. Okay, so that's one reason why our non-directional scanner only have three results, right? And then when it comes to the S&P, so back to the S&P, so you have a major move to the upside, major move to the downside. Now the move to the upside here is very violent as well. So everything is moving very violently, and in that sense, it means that there are many stocks that keep crossing over their average points, okay, because they are basically moving crazy up, moving crazy down. So again, it's making it difficult for the scanner to pick kind of like neat, how do we put it, neat, easy to trade type of opportunities, which is when we stack odds in our favor. And therefore, all the lists that we can see on the scanner are quite reduced if you were to compare to the quantity of stocks that we used to have, let's say, before the end of the year, or during the whole last year, or the year before, or in let's call it normal market conditions. Okay, so we gotta stay patient here, guys, and not to make up trades or opportunities. It's like, oh, you know what, I'm just gonna trade Microsoft because it's a good company. Instead, we should rely on our rules, okay, and keep the discipline up, because this is what will continue stacking odds in our favor, instead of falling into the trap of the markets, where then the volatility is gonna put you in a bad position. Okay. Anyway, so guys, question for you: how is it going? Do you have any question? Because if you don't, I will conclude the session. Today we are concluding the session, it seems, 5 minutes ahead of time, which is okay. But of course, I'm more than happy to stay if you have any question or any consultation. So you guys let me know. And if not, I will just say goodbye. So I'll just wait a few seconds to see um, your messages on the chat box, and then we will call it the day. Seems that all good. Okay, so all of you are good. Wonderful. Guys, my friends, you take care. Good to join you as always. I will see you again next week on Tuesday for the short term session. So keep up the good work, and any questions, of course, you can shoot an email to us, and I'll be more than happy to have my team take a look, and or you can email me directly as well, and I'll be more than happy to take a look myself directly too. A quick reminder here, just in case you're not aware of. I always kind of forget, and maybe I should do a better job at sharing with you guys the various things that we are running in parallel and doing, because some of you may need additional support. So in this sense, I wanted to point at the fact that starting on Monday 25 all the way to Friday 29, we are conducting a Forex class. It is a Forex class really, but it's really a trading class. So what you learn in this class is applicable to all assets, even though we use Forex as an asset, given the fact that Forex is it's quite simple. So if you want to participate of this class, you can just click on any of those boxes, okay? And you have a link here where you can click on the link, and then you can basically register for the class on our website, okay? Also, they're still available, I believe, if I'm not mistaken. You may have to check because I'm not fully sure, but there are early bird coupons that give you access to a reduced price for the class. So it's early bird times 1, and then you also have early bird times 2. Okay, so early bird times 1 gives you 10%, early bird times 2 give you another 10%, so that's 20% off. Not sure if early bird 2 is still working or not, because it's an early bird coupon. So depending on the dates, if you get close to the date, which is May 25, it may not work. So check that. And if not, then you only use the early bird times 1. If not, you then can use both and get a better price for the class. Okay, in case that is interesting to you. It's 3 hours a day from 8 to 11 New York time, Monday to Friday. So anyway, that's it. Reading your comments. Was you, Jose, how will you advise someone working to us the scanner to trade? How will you advise someone working to use the scanner to trade? Yes, so you can run the scanner depending on where you are in the world. You can run the scanner anytime between when the market is closed until when the market reopens the next day. Okay, and I believe, was you, correct me if I'm wrong, but I believe you are in Asia, isn't it? Okay, I believe you're in Asia. So if you're in Asia, that would be morning hours for you, okay, or daytime. You can run the scanner anytime. If you are working at that time, well, the U.S. markets being in Asia open in the evening. So after work, you go back home, you run the scanner, you identify your opportunities, and you place your orders before you go to bed. That would be the way to do it if you are in Asia. If you are in any other time zone in the world, okay, again, just run the scanner when the market is closed. After it closes, okay, like let's say, for example, you're in the US, the market closes at 4 p.m. if you're in New York, or 1 p.m. if you're in California. So run the market in the afternoon or the evening. So you have the results, you plan your trades, and then you place the orders next day. Okay, and then everything about monitoring your trades or even placing the orders, you can do it on your phone. So you can do it while you're at work, but you do your planning at home using your computer screen when the market is closed. And again, depending on which time zone you are in the world. You are in New York time. Okay, got it. So then you will be working on the evening hours. Okay, not sure why was you, but I got confused for whatever reason. I was thinking that you were in Asia. So yeah, so that would be the way to do it. Okay, and when it comes to attending the class again, well, you probably remember that what we said, and this applies to all of you if you ever attend one of our classes. So the way we do it is that you guys attend a class with us, and if you want to re-attend the class, we really strongly like to promote that you build a community within our community. So you have your community within our community, so you are never isolated when you trade. You always have people around you where you can consult and double check the trades and things like that. So you may want to then invite your brother, your brother-in-law, your friend, your friends from the gym to attend the class too. So then you basically have a group of friends or people you know well that trade and use the same tools and the same language that you use when you trade. So in this sense, when you plan your trades, you can do it all together. Which, by the way, that's a great help as well. If you guys are working, maybe you set like a rotating schedule, if you wish. One of you look at the trades on Monday, the next one looks at the trades on Tuesday, and basically you team up with a group of traders to do your trading. Okay, that's extremely recommended. So the way we deal with this in the class, and remember commenting this when you attended the class was you, is that you attend the class for the first time, and of course you pay for it so you can attend the class. But once you attended the class, then if you invite anyone new to attend the class, could be your brother-in-law, for example, then your brother-in-law pays for the class, but then you are entitled to retake the class for free. And that way it helps you to keep motivating people around you to be part of your network, your group of local traders, that you guys can get together, comment on the trades, review the trades, keep each other accountable, keep each other cool when it comes to the mindset of trading, etc., etc. Okay, so that would be the way to do it. Okay, so just invite one of your friends, and then of course you are more than welcome to join us again. That's how we do it. So what's you? I'm building my confidence level so that I can invite many more family members and friends. Well, that would be good if you were to be the instructor, but because there will be an instructor in the class, really it would help actually your confidence level to retake the class. And at the same time, you don't need to have a great level of confidence on yourself and your abilities while you're in learning mode. You are not supposed to be there. You develop your confidence as you practice, and you develop yourself, which takes a little bit of time, isn't it? So anyway, hopefully this helps, and this is appreciated by you guys on our philosophy on how to help you build your own community within our community. And it's time now to close the session, everybody. A pleasure as always to joining you. See you, as I said, on the Tuesday. See you then, and keep up the good work, everybody. Okay, you guys take care. Bye bye, everybody. Take care.